After erecting its electric vehicle castle, Tesla is in a strong position and about to further capitalize on its success. The company's growing capacity to generate income from sources other than EV sales serves as evidence for this. As of right now, Tesla is headed near 2 million units. This is the Super Bowl, the drum roll, to what I think is the battery and supercharger update. The main takeaway from the conference call last night was the FSD discussion with another OEM. From an AI standpoint, licensing FSD to another OEM is eventually how I envision Tesla attaining $1.5 trillion to $2 trillion. Tesla stock is set for a huge rise, despite his statement that it's early days and that we don't know who it is, how far along it is, or whether it will ever materialize. Not only do we think this, but so does seasoned stock investor Dan Ives, who recently disclosed that Tesla may reach the $400 threshold in a few short months. Come investigate this highly intriguing Tesla stock prediction with us. Tesla's stock has a track record of extreme price movements, both upward and downward. News stories, macroeconomic conditions, and market mood are some of the variables contributing to this volatility. Even while these volatile elements still exist, there are strong arguments against short-term changes worrying long-term investors excessively. We'll examine Dan Ives' valuation of Tesla in more detail today, along with the reasons it's critical for investors to keep in mind that Tesla has a history of rising from market downturns and setting new records. Thus, even though Tesla's stock is currently cheap, we think it won't be long until it starts to rise again for a number of reasons. It's Tesla's planet, in my opinion. The others are just tenants. This, in my opinion, is only the beginning of the growing tale. The batteries will eventually undergo the same upgrading as the supercharger. In terms of AI, FSD is the holy grail, and you'll get it. In addition, I believe that this is the breakout the popcorn moment for where the Gerber-Kawasaki team and thought leaders like Nicole are taking this whole green tsunami. Recall that there are other corporations to consider, including some of the European players and some of these transformative companies like Ford and GM, as well as success stories like Iridium and Fast. This $5 trillion green tidal wave will benefit a great deal of people. Among Tesla's independent ventures is its supercharging network, for which it recently inked agreements to expand its network of charging stations with many automakers. By training its FSD software with AI, the company presumably transforms Tesla cars into robot taxis. Additionally, Tesla offers battery storage solutions to utilities and customers. In Q2, this business expanded by more than 220% year over year. Ives rates Tesla a buy based on all of this, with a price estimate of $350 per share during the next 12 months, a 35% increase from the stock's current $258 price. Ives did point out that a $400 valuation might occur shortly, though. Regarding what would be advantageous for Tesla, a specialist stated that in the event of UAW strikes, Tesla might benefit greatly. As the deadline approaches, the United Auto Workers strike against the top three automakers, Ford, General Motors, and Stellantis, remains a threat. To discuss the potential strike and its effects on the auto industry, David Maitland, Senior Advisor for American Worker Project and Senior Fellow at the Center for American Progress, and Nathan Bomey, business reporter for Axios and co-author of the Axios Closer newsletter, joined Yahoo Finance Live. Prior to this, Dan Ives increased his price objective for Tesla by $50 to $350, citing the company's ability to generate revenue from important items like its network of superchargers and self-driving technology. Ives was reacting to Tesla's earnings announcement for the second quarter, which caused its stock price to drop by 4% during pre-market trading on the following day. In light of the fact that conventional manufacturers appear to be finding it difficult to stay up with Tesla's advances, he also hailed Tesla's pricing battle as a smash hit in China, Europe, and the US. Dan Ives is still optimistic about Tesla's stock, despite the fact that some other analysts have been unable to see the wider picture. Welcome back to Tesla Tomorrow, everyone. Ives has emphasized that Tesla has a lucrative opportunity in its innovative agreement to share its supercharger network with other EV companies. He also added that whenever the company is ready to roll out full self-driving more widely, its revenues are expected to keep climbing. Nowadays, Tesla is well known for its enormous electric cars and has a competitive edge in the infrastructure for charging them. The automaker's supercharger network is by far the largest and most dependable in North America and the sole worldwide network for EV fast charging. Throughout the world, Tesla has constructed more than 3,000 stations with over 25,000 stalls, and later this year, it intends to allow other EVs to join its network. We think Tesla may benefit greatly from this, bringing in a sizable sum of money from fees and drawing additional users into the ecosystem. Investors must realize that Tesla's network of superchargers is a strategic asset with enormous potential for income generation, not just a handy amenity for owners of Tesla vehicles. This fast charging station network has been essential to Tesla's success and may do so in a number of ways going forward. Observe a couple of them now. Before we leave, please make sure you subscribe, hit the like button, and enable post notifications if you enjoy this kind of content. This will help you stay updated on all things Tesla. Tesla may still impose fees on its owners and even other users of electric vehicles for accessing the network of superchargers. This pay-per-use charging model is the easiest way for the supercharger network to make money. Additionally, the company has launched subscription plans for superchargers, giving Tesla customers the choice to pay a monthly charge to gain access to the network. Revenue can be generated by customizing these subscriptions to suit various usage levels, such as unlimited charging for a set monthly fee or a set amount of charging sessions. Comparably, Tesla's total financial stability is bolstered by each charging session under the pay-per-use model, which also produces direct money. It's interesting to note that charging is not the only purpose of this membership. Supercharging access can be combined by Tesla with other services, such as car maintenance packages or FSD subscriptions, to give comprehensive bundles that draw in more clients and open up upselling opportunities. Due to its dedication to innovation, sustainability, performance, safety, and the customer experience, Tesla has a solid reputation for its products. For example, Tesla's battery technology has advanced significantly, leading to EVs with increased range. Because of their increased range on a single charge, EVs are now more viable for daily use and long-distance travel. With EVs, range anxiety is a major worry that Tesla has successfully addressed. Similar to this, Tesla upgrades its cars wirelessly with the newest software. Because of this continual development approach, Tesla owners enjoy better cars over time, which improves the whole ownership experience. It's possible that Tesla's attractiveness will only increase as it continues to push technological boundaries and broaden its product line, drawing more customers to its all-electric and sustainable future. In order to increase the number of superchargers in its network, Tesla is able to get into business relationships with towns, other organizations, and individuals. The cost of setting up the networks at these sites might be covered by these commercial alliances, after which Tesla might make money through a variety of contracts, such as fee-based or revenue-sharing plans. It is possible to link Tesla's energy products, such as Powerwalls and Power Packs, with its supercharging network. Supercharger stations can make revenue by storing extra energy produced by solar panels or off-peak grid electricity in energy storage devices, which they can subsequently sell back to the grid during periods of peak demand. With so much data at its disposal, Tesla can make money off of the information gathered from its network of superchargers. Urban planners, electric utilities, and other interested parties will find this data useful in figuring out EV charging trends and infrastructure requirements. Tesla may look into collaborating with outside parties. Through partnerships or agreements, the supercharger network may eventually be expanded to accommodate non-Tesla EVs in addition to Tesla automobiles. In the same way that Tesla embraced the CCS standard in Europe, other manufacturers could have to pay Tesla fees to utilize its